Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach financial independence as quickly as possible. And once again, it's time to unveil my entire portfolio from A to Z. This is episode 19 or update 19 for November 2022. So if you're watching this, make sure you're watching the latest update. Don't forget that I have a playlist dedicated to all my portfolio unveiled videos where I show everything from A to Z, including my book prices with the whole world. So quick update or a quick summary of my investing strategy and style. I am a long-term buy and hold income focused or income oriented investor, and the primary objective of this strategy is to generate high and consistent and relatively safe passive income via dividends and distributions forever, every single month, forever, right? So most, if not all, my returns, everyone, very important, do not come from capital appreciation because I just buy and hold. I don't buy low to sell high. It comes from the monthly income that my portfolio generates. So how do I achieve this? Well, primarily I hold funds that invest in blue chip, dividend oriented stocks or indexes that use income enhancing strategies, right? The income enhancing strategies is always the key. And I'm talking about covered calls here, leverage, and sometimes a combination of both. So they provide fairly consistent income, and the intent is really to hold them long term, never to sell them at a profit, but simply to collect the passive income forever. So what will I show you in this video, everyone? As usual, I will show you an overview of my 6 investing accounts with Passiv, using the software Passiv, a really neat tool which could help really give you a bird's eye view on all your investing accounts if you have multiple investing accounts. So I'll show you the value of the portfolio via Passiv, and then I will go through each one of my holdings and accounts one by one in Excel, which is going to be much easier to digest. So I will show you everything from A to Z. And don't forget, as usual, you could download my entire portfolio, the entire spreadsheet that I will show you on my website, passiveincomeinvesting.ca. Click on free tools at the top and it will be the very first download. Just don't try downloading it with Firefox because you'll go into the matrix. Use Chrome and it should work fine. So it's time to unveil my entire portfolio from A to Z. Let's get going. All right, everyone, this is my Passiv dashboard, which is the combination of my 6 investing accounts, which you could see here on the left. So as you all know, and if you're new here, I apologize, you probably don't know, but I do expect a video in November that will explain in detail my portfolio, the structure of my portfolio, the objectives of my portfolio, how I organize everything. So expect that video in November, so I won't cover too much here. But basically, I have 6 accounts. And 3 of which, my TFSA, my wife's TFSA, and our joint cash account are under the main portfolio heading here. And then you have our retirement accounts, which is my LIRA, my RRSP, and my wife's RRSP. As simple as that, guys. 6 accounts, 2 separate entities, really. But total is at $990 right now. So just shy of $1 million value. Not that I care. Yeah, up a little bit from last time. And this is basically the value you're going to see on the thumbnail, right? So that this is just the value of all 6 accounts combined. But if we just go to the main portfolio, the value is $580. And if we just go to the retirement accounts, for example, it's $409. And keep in mind, this is all in Canadian dollars. So just wanted to show you this. So, Passiv is a really cool tool, by the way, which I strongly suggest you get, especially if you have multiple accounts and multiple brokers between you and your wife, for example. It's completely free if you just sign on to be a community user. So I strongly suggest you guys sign up to Passiv. It's a really cool tool that I use. And guess what? The elite membership that has extra features is completely free if you're a Questrade client. That's right. So if you're using Questrade, this elite membership, which is normally $99 a year, is completely free for Questrade. And don't forget, guys, I have a Passiv referral link in the video description where, let's say you want to try the elite membership, but you don't have Questrade. If you use my link, you'll get 50% off this $99 price. But of course, you could always try it for free first. That's what I would suggest. And by the way, I also have a Questrade referral link. If you want to switch to Questrade and get $50 worth of free trades, use my Questrade referral link below. So yeah, this is the total value of my account. I'm not going to show you my holdings here because I'll show it to you in Excel, which is going to be much, much more clear, but it's not because I don't want to. But I mean, you know, if you want, I could click on my TFSA and, you know, this is what I have in my TFSA and the joint cash account. This is the stocks we have in here, Erica TFSA, what we have in here. So the reason I don't want to go through it there is because the book prices are completely wrong, because once I transition from TD broker to Questrade broker, unfortunately Questrade you know, has registered the book prices at the time of transfer. So my book prices are completely off. This is why I track everything and manage it with Excel, which we're going to take a look at right now. All right, so we're going to start with the retirement accounts first. That's what I usually start with. And don't forget, these are 3 accounts on this Excel sheet, right? If we go back to the passive, you see here, Adrian LIRA, Adrian RSP, Erica RSP, retirement under the retirement accounts. That's exactly what I'm showing you here. So first we have my RSP, then there's Erica's RSP, and then there's my drip. So let's go through the changes that I made from last portfolio unveiled, because we got a lot to talk about this month, everyone. So first of all, you want to click on RSP tracker to track my changes, and I did make some changes. First of all, in October, I bought an extra $2,000 worth of BDCX. I also invested $15,000, that's right, 15,000 Canadian dollars in my wife's RSP account, which translates to, you know, 5K US in QYLD and 5.9K US in HYLD.U. So if you combine these two, it's, you know, just under 11,000 US. Basically, it was a $15,000 Canadian investment. Okay, guys, that's what I'm trying to say. So I added more to QYLD because it's extremely undervalued now. It was too tempting. I had to add a little bit more to QYLD, and then I added a nice chunk in HYLD.U or HEL.U, which of course already has QYLD, and just added JEPI, which is amazing. Now in November, very, very recently, I did finally get rid of the rest of my OPP closed-end fund, and I also got rid of or sold. I was sad to see it go. HGLB, another closed-end fund. So OPP, you guys, I know I've been talking about it, that eventually I wanted to get rid of it simply because my RSP account, I want to go have a little bit more fun with it, and OPP was quite boring. Also, don't really care much about fixed income anymore. I'm starting to get away from fixed income, so that's really why I got rid of the OPP. I've been getting rid of it in the last couple of months. Finally, you know, divested all of it, got rid of all of it. Hey, if you guys like OPP, it's a very good fixed income oriented type of fund. Hasn't been doing well recently, so now is actually a good opportunity to buy some more. But, you know, I simply got rid of it for that reason. Too boring for me. HGLB, I love this closed-end fund. It's always trading at a premium. I was up on it. So you're probably asking, why did you sell these two? Well, it's because CLM was extremely undervalued, and I just had to get some more. So that's really why I sold them. And I got to about 20K proceeds. I put 10K in CLM, 5K in CEFD, which is an all-in-one closed-end fund solution. And I also put 5K in the Ether ETF simply because it was very undervalued. So my yield is a lot higher than it was last month. I'm rocking a 16.82% yield overall with the funds I have now. The Ether one, you know, I averaged down from 450, I think, to 377. CEFD, I bought more. I averaged down about $1. CLM averaged down about $1 as well. So now CLM makes up 25% of my portfolio. And of course, we know, let's go through the holdings now one by one, guys. So CLM, of course, is resetting their dividend. They announced the new dividend. It's something like $1.47 or something like that, if I remember correctly. So starting in January of 2023, the annual dividend will go to 1.47 approximate. So my yield will still be over 14%. So I can't complain about that. That's just the way CLM works, guys. It resets every year at the end of October at 21% of the NAV. Moving on, SVOL. Can't complain about this one. I love this one. Rocking 32-cent distributions all day long in the last 5-6 months, making over 16% yield here. Very, very good. Very, very unique and consistent. I love this one. CEFD, I did add a little bit to this one, so I'm at 30K here. So these three are really my 3 biggest positions, or my primary positions. So CEFD is basically an all-in-one closed-end fund solution. It's basically tracks an index that has like 110 closed-end funds. So really, really awesome. I think of it like a higher risk version of Riv. Riv kind of does that. They try to find, yeah, they try to combine a lot of closed-end funds. But my wife's RSP is a little bit more conservative. Mine is going to just, I have fun with my RSP, guys. Let's be honest. It's my YOLO account. So CFD, add a little bit of there. Making a nice yield overall, 13.68. It's about $20 now, so I'm still, I average down a little bit. BDCX, like I showed you, I add just $2,000 to it. So I'm at 12K. So all the, by the way, the rest of my positions are probably always going to be niche positions, whereas these ones are going to be primary. So yeah, BDCX, quarterly distribution. That's the only annoying thing about this one. It's a quarterly dividend. It's actually the only quarterly dividend stock I have left. But this basically gets you access to all the BDCs out there, combines it, and gives you 50% leverage. Same company as CEFD, right? Same style. Put all the closed-end funds in there and add 50% leverage. ORC is definitely my underperformer. I'm still keeping it. I invested 15,000 in it. It's not even worth. It's worth like 6 or 7 now. So once I get at least $10,000 out of it, I'll probably sell it. But I'm not gonna sell it this low because hey, I'm still making $100 a month on it. 7.7% yield, and they haven't reduced their dividend again. It's still $1.92 annual dividend right now. That's with the split and all that. So I'm just gonna hold on to it and wait until it gets to about $16 a share, and I would be okay to sell it, even making a $5,000 loss and redistribute it. ORC is actually pretty much my last single stock. I never want to buy single stocks again. Then I have the SLVO and USOI. Credit Suisse ETNs, which have both declared really, really good dividends lately, especially SLVO. So it seems like precious metal and silver is finally picking up. And by the way, these distributions on these dark blue ones, it's, I put here the average based on the last 3 distributions, but this one technically is not. This is just the last distribution because it's the first distribution after the split. So once the next 3 come out, then I'll do the average on these 2 basically. But yeah, very, very high yield on the silver one. The silver one has a much bigger distribution than in the last couple of months. So very happy about that. Oil one, definitely my biggest payer right now because oil is very volatile and very high right now. But these ones always remember that they're a bit crazy and they could vary greatly. Ether added a little bit more. I mean, this is like very, very low. So I added a little bit more here, 5K more. Probably won't be adding much to it, that much in the future because it's already at 20K and my limit is 10% crypto everywhere. So I don't want to have more than 10% here. So all in all, I'm making a really, really great yield. Of course, this yield is going to drop in January when the CLM distribution resets, but it'll still be over 15, which I'm very, very happy about. Wife's RRSP. So like I said, I add a little bit more to QYLD. So I have these nice monster drips going through every month. I hope QYLD stays low for the next 10 years. I don't care. I'm dripping it. So my wife's account, by the way, is completely on drip. Mine is not. It's manual drip here. I manually reinvest once a month because I like to have fun with it. But my wife's account is completely hands off. So yeah, added more to HYLD, added more to QYLD. And that's it. Nothing else to report here. So all I do for this account is literally just track the shares and the annual dividend. So my income just keeps going up because I'm getting free shares with the drip every month. And then last but not least, I have my LIRA account, which I just put the Bitcoin in. This is leftover from my Air Canada pension. So I just decided, take a big chance with it. And of course, it's not panning out well right now. I'm down 47%. But hey, every month I'm dripping and I'm buying cheap BTCY shares. And hopefully, this is Bitcoin and crypto. It could double within a month, so who knows? So that's pretty much it. So total revenue income rather between the 3 accounts is about 58.66 Canadian a month, which is higher than last time because of the additions that I made, but also because of the interest rate, guys. Don't forget that this income is all getting generated besides BTCY, of course. That's why you have BTC. I had to do a separate one here because it's the only one Canadian. But all this income in these 2 accounts is all USD. So if the Canadian dollar starts going down and the US dollar starts going up, it's actually a good thing for me because I'm tracking everything in Canadian dollars. Now let's check out the main portfolio. All right, time to look at the main portfolio, everyone, which is a combination of our 2 TFSA accounts and our joint cash account. So first of all, let's check out the $15,000 of investment. So I invested, like I mentioned in the picks video last Sunday, I invested $30,000 in October and November thus far together. So 15,000 went in the RRSP, my wife's RRSP, like we saw, and 15,000 went in the main portfolio. So what did I buy in the main portfolio? Well, I got 5K of HDIV, 5K of HYLD, and 5K of BTCY. All things that I feel are undervalued right now, especially the crypto. I thought it was a really good time to buy it. So let's go through one by one my positions here. And as you know, I track everything here. You could see my book prices. These are the real book prices, not the one in Passive. But of course, it's not Passive's fault. It's when I did the transition from TD to Questrade. You see my yield, the annual dividend. Everything is tracked here, everyone. And stay tuned for that video sometime in November, where I'm going to make a detailed video on basically explaining what you're looking at here, because I know I keep getting questions and frequently asked questions about this stuff. So once you see, I'm going to create that video separately, so it's always I don't have to repeat during the monthly unveil videos. I want to really stick with the holdings and the changes I made and focus really on the holdings. So first, of course, which I added 5K to, is HYLD. This is the biggest position in my portfolio, and it's the biggest position in the RSP, of course, because Erica has a big chunk of it in her RSP. So they recently added JEPI to this covered call all-in-one solution. I absolutely love HYLD. I think it's one of the most undervalued funds right now, simply because it's very tech and US focused. So my book price is still relatively high at $15, but my yield's at 11.19. So I'm sure most of you watching have a much better book price than me, but I bought a lot of it when it first came out, before the market went down significantly. HDIV. So HDIV actually just announced the recent change, and I'm going to have a video coming up to analyze that in detail. So I think HYLD just got better, and HDIV also just got better. They actually removed, I didn't update it here, but they removed the FLI ETF and replaced it with HFIN ETF, which is actually an enhanced ETF managed by Hamilton that does not do covered calls. So HDIV is not 100% covered calls anymore. So if ever you're worried and you want that little bit of growth, well, HDIV now has about 15% that is not allocated to a covered call ETF. But I agree with that decision because of the big reduction in fees, and I didn't really like FLI anyway. It's just insurance companies. So HDIV, HYLD, really nothing to report in terms of distributions. They haven't missed at all. Same thing for HDIV, everyone. This is the Harvest all-in-one covered call ETF, which I bought an extra 5K of. This is what's inside. Hasn't missed a beat, and I don't expect it to. So these three are really, really awesome. But now we have a fourth player in the game. The fourth all-in-one covered call solution from Brompton, and I added it here. I didn't take a position in it yet. I didn't invest in it yet, but I know for a fact that I will eventually. So I already added it to my sheet here. So this, of course, I came out with a video on it. I also did a Q&A with Chris Cullen from Brompton about it. That video is coming out Wednesday, so look out for that, where I discuss it with him. So this is, we're spoiled for choice, guys. What could I say? So these four are probably, are really the ones I'm going to be concentrating more as my foundation. Then in terms of the rest of ETFs, there's the crypto ones. Of course, you guys know I only invest in the crypto ones with the covered calls. If there's no income, I don't want to know anything about it. But BTCY, ETHY from Purpose is the only way pretty much to generate income off of crypto with an ETF, basically. So I bought a little bit more BTCY. I averaged down from 7 something to 640. So I'm happy about that. I am making a little over, almost 6.5% yield. But I'm not worried about this one. I'm actually excited because remember that these yields, or the annual dividend, will go up if Bitcoin goes up, right? So if this one, let's say, goes back to 90 cents, which it was at one point, bang, my yield is at 14, guys. So it's very, very exciting stuff for the future. But hey, I'll wait it out. No problem. I'll make my 190 every month while I wait. That is the privilege of being an income investor. So I do have 35K in BTCY. I am planning to put 5K in ETHY this month to even it out here, because I want to pretty much keep an equal part Bitcoin and Ether. So I will be, overall together slightly above my 10% limit. So, I always want to be I made a personal objective of always staying approximately 10% crypto, not more, not less. So that's it for the ETFs. Moving on to closed-end funds, which include, of course, split share funds. Did not add to any this month. I didn't see anything super attractive. right? HDIF, HYLD, BTCY, and that's pretty much it. I haven't been. The last time I added a little bit was when I sold DS in August to put a little bit in most of it in HYLD, HDIF, and I added a little bit in DFN. So, of course, we have EIT. In my personal opinion, this is going to be the big winner of 2022. I think it's going to be the most best performing fund in terms of total return within this year. And I keep saying it, I'll say it again. It's because it doesn't have tech stocks. So EIT has the highest management fee out of everything here, guys. It's actively managed, and this is where you could see that active management does pay off. These guys they're brilliant stock pickers, and they had the wisdom of not having or investing in technology stocks. Instead, they went mostly with energy and financials, which is doing really well. So this fund is doing extremely well. DFN hasn't missed a dividend in 2021 or 2022. It's still going strong. Nothing to report here. And of course, don't forget, guys, if you're downloading my sheet, what I track with all my split funds is when was the first distribution of this fund, how many distributions has this fund missed since inception, and how many have I missed? Have I missed any? So if I missed any, you'll see it in orange. If I have not missed any, you'll see it in green. So that's basically the colors, guys. Very simple. FTN, I think this is probably the most undervalued split fund right now. I think the premium is like close to 10%. Which is very rare. Usually, the premium is usually 15, 20, 25%. So I think FTN is probably the most attractive split share fund right now in terms of value. Maybe I'll pick some up in the next couple of months if it stays that way. Nothing to report here, right? It's all financials, 15 financial stocks, 10 in Canada, 5 in the US. LBS and SBC are my financial split funds owned by Brompton. So LBS has the big 6 banks and 4 life insurance companies. SBC has the big 6 banks. So LBS still has not missed a dividend in 2021 or 2022. Really good. That just proves to you how strong the Canadian financials are. SBC has not missed as well. So really strong. Have no complaints about these guys whatsoever. Very high yields I'm making, especially on SBC and LBS. FTN a bit lower because I went through that reverse split, but hey, even with that, I'm making almost 11%, and if I add a little bit more, I'll be making more than 11, which I'm happy about. DFN can be very happy with it, 15% yield, even if it misses a dividend here or there. Gotta expect it when you're making 15+% yield, guys. GDV still going strong, always trading at a big premium because it's popular. Hasn't missed a dividend, not even close. It's usually at the $18 unit NAV, so 10.5% yield, no complaint here. Don't forget that now GDV, we have that BMAX option. So if ever you're thinking, maybe should I invest in any Brompton product? So whether it's LBS, SBC, GDV, DGS, PWI, don't forget that you have an all-in-one Brompton product now. That's very attractive because it's not a split fund. You don't have to worry about missing dividends. So. But I'm not planning really on just getting rid of all my split funds from Brompton and putting it into BMAX. I'll probably keep what I have just because I like it that way. DGS missed the November dividend, guys. So they missed 2 dividends so far in 2022, July, November. I don't see this as a red flag. It's just how the fund is, guys. If you're making 18% yield, look at it. It's my highest yielding split fund. You have to expect dividend miss once in a while. Even if you do, it's not a problem. So yes, they missed in November. So technically my monthly income, 57.86, is really 57.86 minus 306 in November. This right now it's over 15 unit NAV though, so December it should pay. PWI, very boring, has real sustainable power and infrastructure stocks. Again, a good alternative would be BMAX, but out of the split funds, FTN and PWI are the ones with the small premium percentage. I think PWI is like 11% yield now. Very attractive to pick some up. So if ever you want some infrastructure stocks, boring utility stocks with a bit of leverage, PWI, really good pickup right now. And then of course you have ENS, which is Enbridge. Nope, just chugging along, guys, making almost 12% yield. This is awesome. On this list, it's a split fund with the highest unit NAV. I doubt this guy will ever miss a dividend ever because Enbridge is just literally liquid gold going through those pipelines. RS is my go-to for real estate. So RS, big chunk here because it's my go-to for real estate. So remember, one thing that's really not really present in especially these three, there is a little bit of real estate in BMAX, so there's not much real estate there, guys. So RS is my go-to for real estate, and I want to always keep approximately 10% in real estate. That's just my personal, preference or objective. So I have 10.8, no missed dividends, not even close. Right now the price is like $14-15, so it's a good time to pick it up because it's over 10% yield. I'm making 9.66. So all in all, everyone, that is it. The total value, or my book, let's start with my book cost here. Let's go with the total. So my total book cost, how much money have I invested? 650K. What is my portfolio value of my those three accounts together? Like I showed you in Passive, is about 580,000. So I'm actually just down very, very slightly, like at down 11.5% off my book cost. But don't forget that I'm extracting the income every month. So I am making right now 57.86. Of course, if DGS misses, it would be 57.86 minus 306, but I'm still making over $5,000 a month in passive income. So, it doesn't really make a difference. So my portfolio value, which is this number here, plus my profit is 889,000. So 889,000 versus 650,000. I'm way ahead. If you're asking, well, what is your profit? Well, it's basically all the income I received thus far, which is I just passed $200,000 in passive income, guys. Really, really cool. Plus the capital gains that I realized, because I made a lot of changes in my portfolio in the last couple of years. So by doing that, I realized a lot of capital gains. I also have to sell a big chunk of my portfolio to pay for my Panama visa, or to qualify for the Panama visa. So that's why there's capital gains here. So together, I consider that profit, right? All the income I get, that's realized income. All the capital gains that I realize, this is why I'm careful to put, realized here. That's my total profit. So this number is basically this plus this number, so 889. So all in all, I'm up, and everything is just going well. Nothing really too crazy to report besides DGS missing, but this is the environment, everyone. I just gotta reiterate that this type of portfolio shines in a bear market because you're always getting paid no matter what. So I can't be happier with this strategy. Everything is going fine. My annual dividend yield is a little over more than what it was last Unveiled, simply because I added to my BTCY and HYLD. I made these contributions here, so that of course raised my yield at 10.69. So all in all, everything is going well. And here's my entire portfolio in black and white, everyone. And don't forget, you could download it on my website. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.